We warned you. We told you yesterday it was going to be volatile. We said that Bitcoin always dumps after an FOMC meeting. We told you that the price of 25 basis points was already priced in. So what's next? Well, the Fed flipped the switch and stopped quantitative tightening. And we're going to break it all down for you, tell you what it means, what you got to be on the lookout for. Welcome back, Crypto Crew. It's your boy Tommy. I'm bringing you the hottest in crypto and Bitcoin action. Make sure you give us a like. Make sure you hit subscribe if you haven't already, and make sure you come on over to X and follow us on X, where we talk about Bitcoin all day, every day, because we're crypto maniacs, and we definitely give you real-time desk commentary on that X account. All right, let's get right into it. We gave you the warning yesterday. Yes, we said that the 25 basis points was already priced into the marketplace. So, what's next? What do we got? What are we looking for? Okay, we're down today for one simple reason. You got to understand that the rate cut was already priced in. Said it yesterday. Told you to get into our pro group. We would help you out through it because we knew it was going to be volatile. And yes, it is volatile, and it's been one direction right now. The floodgates have started to open where the big players are. What are they doing? They're basically shaking the tree to see who falls out. Okay, so now the market bought the rumor. It's now selling the fact. Powell's follow-up. I told you the guy was a skunk, man. The guy's a skunk. He comes out and he says a December rate cut isn't guaranteed. Now that gave the bears just enough oxygen to get a foothold into the marketplace. But I'm telling you, overall, M2 is going to, it's going to increase again because of this. It's going to take a little while to work out, but we're going to give you the points that you got to watch short term. And get into our pro group. We'll help you out with this. Yes, really, if you really look at Bitcoin itself, we've been trading between 100 and like the latest high that we had for how long? We're looking at this daily chart. You could look from like the 100 from this level all the way across. If you look at this, it's been quite a while that we've been sitting in this range. Let's just like look at this point and come on over to today. If we look at this, right? We're looking at 142 days. 142 days. 142 days we've been here. Okay, so market is in one big tight consolidation for the longer term, right? Now, if the bottom goes, it's going to be ugly. And we've been talking about this ghost in the machine that's been, hovering over our head. That was actually the beginning of the video yesterday. I said the ghost of the machine is still here. Now, the big boys are trying to push this down, but I honestly believe the pros are running the stops to reload inventory. Retail panics on the headlines. They're just, I say it again, they're just shaking the tree to see who falls out before the next squeeze. Now let's get on over to the 2-hour chart where we do our little support and resistance. All right. We had the regression channel up. This was a classic rollover. It's trading right now right around 108,000. We dipped as low as 1076. Right? Is that right? Did we go down there? I think so. I think we went down to 1074. Dogs. 1074. So far, the high has been 113.6. The low has been 1074. It actually has been an expanding lower range breakdown right now after the failed breakout at the 116.4. Now, the market tested the upper band of its regression channel and rolled over. This is a textbook sell the news reaction. The pros played it beautifully. I mean, you got to give them a hat tip. All right, they played it beautifully. Now, I honestly believe that they actually took back a good amount of their shorts here. But they left, I would say they left probably about 25% of their shorts open. Why? Because you put the stop at entry and you're good. I mean, now this is all windfall for them. So if I'm looking at this market, if I'm sitting there and I'm trading short right now, what am I looking at? I'm looking at this level down here, the 106.7, because there's two areas of support before, the main support down at that 10, like where are we? Here is that is a 103.5. There's these two levels right here, and there's a minor at 105. But really, they're probably looking at this area right there. Yeah, it's getting ugly. Yep, yep, yep. So right now, for me, the levels to watch overall are the 104 to 106, which is what I would consider zone one. Okay? The only way we're going to get a reprieve right now, right now, the only way we're going to get a slight reprieve from this bearish downward pressure is if we can get above, I would say, where are we? Went down to 107.4. Man, we need to get back above this time right here, like 110.5. That's the reprieve level. Okay, let me put that on. Let's look at it. Okay, so right now I'm thinking that like the 105 is a warning, the 104 definitely. So 104 to 106, I would say right here, 104 right up to like oh, why isn't that thing working? Let's go like this. Brush 104 right here to like the 106. This is the area of like major support right now. Now, the only way we get any strength is if we get above, say, 110.5. So we're in for a little bit more of some pressure right now. Now, we have some good stuff on the horizon, so it's not all bad news. But right now, we're in a little bit of a meltdown. Okay, I don't think that Bitcoin's going to fall out of bed. That's just my personal opinion. But hey, the bears have got me right now. I'm not ready to sing yet, but I'll always admit when I'm wrong. I don't think that I'm wrong right now for the simple reason that we got ETF data shows that we had 470 million net outflows across FBTC, IBIT, and ARKB yesterday. Now, that was just institutional profit taking. Dominance now in Bitcoin has slipped a little bit. We're going to get into that in a second. But there are a little bit of alt rotations, but it's nowhere near alt season, right? So really, this is where the pros are going to start to tighten stops, and they're going to let the retail chase the noise. They're in complete control right now, complete manipulation. Yep, they got the ability to do it. So here's the plane. Here's the plan. Here's the plane. The plane is actually get on the plane and get over to Hawaii and sit on a beach for the next couple of days because this is just going to be a quagmire. But really, here it is. And you got to get into our pro group because we'll talk about this. I would think that the only way to trigger a long is to close above 111. Now, I would want decent volume on it. Okay, I wouldn't want really high volume. Okay, so but I would want some decent volume on it for a volume confirmation. Now, a short setup is if we lose, say, 107 with rising open interest and neutral funding. Now, that would be where, you'd have to place like an ATR-based stop, like 1.8K risk, maximum, 2R, gain on the trade. Now, as it stands right now, if we go back to this chart as we kind of, forecast yesterday, we said that, it always falls after an FOMC meeting, especially if the price comes, the rate cut comes in as expected. Now, of course, if they didn't do anything, right, it would be a lot worse than it is right now. We'd probably be at 97,000, maybe even 93,000. So the coin is holding up. And if you see on our chart, what we're showing here is we get a potential to go to 104, even test that 103.5. Okay, now, the Fed also said yesterday that they will end quantitative tightening on December 1st, 2025. That's something that the market hasn't really taken into consideration yet. Now, I'm sure the big boys know it, and they're not about to talk about it because they're having retail freak out right now and sell the bags to their hands, right into them, okay? But they're going to stop letting treasuries roll off and reinvest maturities into new bills. At the same time, meeting their they cut the rates 25 basis points, right, to 3.75 from to 4%, right? So quantitative tightening is ending, which equals a liquidity drain stops. Now, it's not quantitative easing, but a shift towards neutral. That's why it didn't go full blown quantitative easing, but it's good news. Now, the Cleveland Fed said the long term balance sheet size is to be determined. Then Powell comes out and says, no promise of another rate cut in December. That's what hit us hard. Now, I firmly believe that's going to work its way through the marketplace, and the big boys will start to actually buy back the coin. But, it's going to be one step at a time right now. And the Fed ending quantitative tightening from December is a game changer in the liquidity story. But we can't misread it as a free for all because structure still leads this whole thing. So the Bitcoin structure still leads. Got to hold 100, okay? And the regular structure. If you look at the 2-hour chart, right? There's structure that has to hold. We got to hold the 103. And we got to get above the 116 right now. Overall structure, right? Now, let's look at a market backdrop. There's no denying that crypto and gold have both thrived on rate cuts and cooling inflation. Now, gold futures are up 28% year to date, mirroring Bitcoin's 2025 run. Both of them fed off of a weak dollar. But now look at this. This bloody dollar yen. I told you, got to keep your eye on this guy. This thing is rallying like mad. It's also throwing things off against, the British pound, the euro dollar. Okay, now the British pound hasn't really fell that much compared to right now how dollar yen is rallying. Okay, now dollar yen's critical level is actually 154. That price is like a critical price for dollar yen. I'll put it up like right here if you're interested in dollar yen. Okay, that's a critical price. If it can hold this level, now of course it could drop down to 153.60, play around this area, but if it holds 154, it's actually showing a rally intensive up to like maybe 157. So it's an important pivot point. Now, if it gets down below it and breaks back down, through this previous top, then it's going to fall back. But the previous top is only at 153, like 27 on this 4-hour chart. It could actually fall back down into the low range at say 152, which would actually cool the U.S. dollar index off. Okay, so right now that's the culprit. That's another thing. So we got to keep our eye on dollar yen. Now, the U.S. dollar index spiked Wednesday. If it holds rates in December, the greenback could roar back and squeeze risk assets. That's the issue that we have. So many things to pay attention to. So many things to pay. That's why I get into our pro group. We'll help you out. We do all this stuff. Love doing this stuff. Okay. Now, because we know that really when the dollar rallies, liquidity tightens and speculators suffocate. That's just what happens, right? Bitcoin breathes easier when the dollar really exhales. Now, we look at Bitcoin and we look at this and we say that, look, Bitcoin, there's always a lag, right? 108 days. We've been talking about this. And it's still in play. Now, Bitcoin's kind of retracing a little bit, but I would honestly think that it's going to play catch up pretty quickly in this. Now, I know we've been saying it, and I'm going to have all the haters come in. Tom, you've been wrong, blah, blah, blah. Not wrong. The market's actually at the same bloody price, man. Okay? I mean, if it was 89,000, I would say absolutely wrong. 90,000, absolutely wrong. Even 97.5, holy smokes. Absolutely wrong. We're at the same price, man. Okay, we didn't get the breakout, but we warned you about what happens when the price, when the rate cut comes in as expected. It was already priced in. What more could we say? We told you that. Said it was going to be volatile. Told you to get into our pro group. We'd help you out. Can't do any more than that. I mean, if I actually knew the exact future, right, I really wouldn't be hanging out talking about markets, right? I'd be just like, richer than, I'd be the richest man in the world. I'd be the Jacob Fugger of today's age. If you don't know who that guy is, look him up. Richest man in the world, Jacob Fugger. But anyway, so when we're talking about, we're thinking that gold is actually going to start to cool off. And we put our money where our mouth is. And I'm going to show you this. Look, you see that? That's Frank's good old knee right there. He was actually going in selling his coin because he honestly believes that the top is in. So he puts his money where we put our money where our mouth is. Now we're expecting Bitcoin to actually break out of the wedge. I know. I saw the comments. Yes, you're absolutely right. Rising wedge could go either way. Absolutely. Could be a bearish pattern as well. Yes. But because of where we're looking at, where's my M2 chart? Right there. We're looking at M2 and we're saying it's going to get a rise because of M2. But we've been saying that for the longest time, but right now, okay, we got the ghost in the machine that's really whacking us around right now, that potential double top. We got to hold that 106 level on a weekly. Got to do it, or else we're going to be in for a deeper retrace. We've said it before. So the Bitcoin gap itself, it got filled. Right now, what? Well, we filled the gap. We actually went a lot deeper than I thought we were going to go. All right. Now, that's basically, again, manipulation by the big boys, pushing the market around and really scaring the duck feathers out of retail. Oh, and let me just address a comment. Yes, I use bloody and I use pub. And I use a lot of different vernacular from the British or the Aussies because I worked with them quite a lot. I don't even say, I'm from Long Island, New York. I don't even say garage anymore. I say garage. Just to drive my friends at the cigar shop crazy. I say, yeah, I put the car in the garage. And they're like, what? What's a garage? I'm like, garage. But anyway, yes. So that's where it comes from. And plus, there are many times that I would love to use verbalizations in this video. Okay? But I can't because YouTube will like cut down my reach. So I can't say, verbalizations that I normally would say on a trading floor. So now I got to say bloody. Things like that. Helps out a little bit. But anyway, so just to show you that I read all the comments. Anyway, so right now the gap is filled. Smart money was weighted. The weak hands got exposed. We dropped a lot lower. So the zone has done its job. But from here, it's going to bounce upward. And how it bounces upward is if we get above the top of the box. That 114. Well, I'm saying really right now, really 111 would be good to get above. But really, if it cannot get above this, we're going to bleed slowly. Yes, it's just going to be a downward grind, and the market's going to have to find its own level of support, right? I mean, we know where the levels are, but we just got to make sure that they hold, or else we're going to be in for a deeper retrace. Okay, so and as I said, we think that gold actually cooled off, and we got Frank selling some of his coin right there. All right, so now if we look at this, all right, we got some wild cards, right? We got Trump meeting with Xi today, so we got a potential trade deal headline, which would help. Okay, we got mega, cap tech earnings this week. Now options, the option market pricing has had massive swings, massive swings. So really, if we can get some good trade news from Trump, and we can get the AI volatility like to stop bleeding into the macro sections, when equities shake out, crypto trembles twice as hard. If we can get that to stop, we're looking at what? We're looking at the Bitcoin rainbow chart right here. Every time it hit the red, it moved back down into the blue. We're climbing the arc again slowly. The noise is the short term, the cycle is not. So right now what we're going through is just noisy. It's just noise. And as I said, we have not really gone anywhere. We haven't gone anywhere. All right, so we got liquidity is easing on paper, but sentiment is fragile. Really, the next couple of weeks are going to decide if this is a mid-cycle pause or a total bear market trap, right? So our job is to react to structure, not really to like the noise that's happening right now. All right, let's move all over to good old Ethereum. This is another one that's having a rough time of it right now. Where's my Ethereum chart? Hang on one second. We showed you this chart yesterday. We're thinking that Ethereum looks a lot like 2020. We got consolidation that's still happening, still grinding, getting ready for the breakout in Ethereum. Now, Ethereum, of course, is taking the passenger seat to Bitcoin. Bitcoin dominance is still running the show right now. People are still trying to sort Bitcoin out. But we could actually see once Bitcoin dominance cools and Bitcoin gets its footing again and begins its upward trajectory, Ethereum is going to break out. Now it's trading right now around 3,800. It's down about a half a percent on the day. Institutional desks are quietly rotating into Ethereum for DeFi and L2 exposure. It's happening, but Ethereum ETF saw minor outflows this week. Not alarming, but it still shows some hesitation. So we got support right now. Major support of Ethereum is 3,700, 3,600. Resistance still sits at 4,200. 4,500 supply band. Now, Ethereum and Bitcoin, the pivot point really is 0.036. A break above it is actually a rotation confirmation. But Ethereum is really where the smart money is starting to hide when Bitcoin gets noisy. So watch the ratio. That's your compass, okay? So let's check out another Ethereum chart I have for you. Now, we got Ethereum that's unfolding like a Wyckoff master class right now. The spring is done. The test passed. The sign of strength is starting to get locked in right now. The next phase is going to be the explosive markup. This is where the disbelief is going to turn into fear of missing out. Now, you know we're big Wyckoff fans here. And, you know, as I always say, Wyckoff is screaming from the grave on this one. So really pay close attention to Ethereum. Get into our private group because that's where we'll alert you to when we're jumping in and, you know, when you should get involved. And speaking of that, how can you get into this private group? Well, it's real simple. You come on over to here, you click this link right there, you're taken over to our Telegram trading community, completely free to join. We drop insane alpha trades, got you covered in this group. If you want to go it alone, we offering 2 brokers of our choice right here, both offering insane bonuses for you. Click this link. You'll get, I think right now, WeX, low fees, fast execution, is offering, I think, no fees for life or something like that. And you got BTCC right there giving a $500 US token giveaway. Help you out with your account. Both of these brokers are excellent. We suggest you level up your trading by just joining our pro group. Doesn't cost anything. So come on in. All right, let's get on over to Bitcoin dominance. Let's check out Bitcoin dominance. We all know that altcoins thrive when Bitcoin dominance cools. Right now, Bitcoin dominance is very, very high at 59.74. It broke its ascending wedge, but that break always triggers rotation, but it's taking some time because we had that retrace after the tariff nonsense, right? So every major alt season started like this. The alt season engine has been switched on, but there is no smoke yet. It's just starting to smoke. Let's look at the altcoin market itself. If we look at the overall altcoin market, we can see that it's forming a cup of destruction. Alts are forming a multi-year cup and handle. Structure is textbook. Momentum is slowly grinding away and building. Retest held. The bulls are in control. It's not the time to look away. It's a prelude to a vertical liftoff in the altcoin market. Again, get into our pro group. We'll talk about which utility coins are going to be the best for you. So again, you know, what we got going on, we got the macro headlines. You know, you're not being paid to be right. You're getting paid to stay in the game. So structure, trigger, size. You got to just remind you that we're going through some stuff right now in Bitcoin, but don't worry about it, you know. So right now what do we got going for us? We got the Fed that ended quantitative tightening December 1st. Liquidity starts to loosen. Dollar strength remains a swing factor in all this, where we talked about US dollar yen, that dog right there. All right, starting to cool off a little bit right now after breaking out, going up to 154.50. We got the CME market gap that's been filled. Okay. Now we got Ethereum rotation is potentially alive above 4,100. Altcoins still, speculators in the game. So again, we got to trade what's real, not what's loud. Don't, we're not going to predict anything. We're just going to prepare for it. So make sure you come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day, every day. All right. So what do you got to do? Well, you definitely have to join our pro group. If not, you got to trade with your head, not over it. You got to do your own research because, as you know, I am not a financial advisor. I am a trader just like you. And also, as a short term trader, you got to enjoy the party, but dance near the door. Cheers.